So this has to be marked with a different color, this one, because it's a minor structure. It's inside this big lower high and the lower low. Right, this lower high and this lower low. So all these structures inside here, that's our minor structure.
Okay.
So let's see if we can have an example here. No, not this one. Let me look for another one. Where's my other? This one. All right, let's look if we can have. All right, that's we have one here. Yes, we have one here. We have one there. Just give me a second here. Right, so if, for example, if you look at this setup here, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. This was a small minor structure here. This is the lower low. And this was the lower high. Right. So, like if you see from the back, it's low, high, low, high, low, high, right? This low, this high, this low. Now there's no high like this here, but you have all of this. So this is now a complex pullback, this one. So this would be the one that you mark in different color. So that's the main and minor structure. It's inside this high and this low. So this would be the lower high, higher low, higher high, higher low, higher high, higher low. So to make a high, then BMS, then this becomes the lower low for the big structure. Then another complex pullback again. So there were two here. Because when they broke market structure, the structure was now this. This was the structure. Okay, so lower low, then again, lower high, this will be a different color again, another complex pullback. And then when they broke this market structure, again here, there's another one. All of this. Because this is now inside this. All of this. So this high, lower high, higher low, higher high, higher low, higher high, higher low, lower high. This is all minor structure. Okay, so these are all, so big structure. Okay, then this is all the small structure. All small structure. That's the difference.
Okay.
And then lower low, lower high, lower low, lower high. Right. That's where we are right now. Yeah. So do you understand now?
Yeah.
Then we go back. So now today we're going to do then we open my stuff. So today we're going to learn about order blocks. That's lesson 2. Order blocks. So order meaning the buy and sell orders. So order block, these are candles that are used by the big guys, okay, to buy and sell. So we have two types of order blocks. We have the bearish and we have the bullish order block. The bullish order block, right, is the last bearish candle. A bullish order block is the last bearish candle on a downtrending market or downswing. Okay, so when price does this, the last down candle here, the last bearish candle here, that's our bullish order block. That's the last time they sold and they began to buy. So that's what we call a bullish order block. So when price comes back to the order block, we buy again, then price goes up. And then for a bearish order block, okay, that's the last bullish candle. The last is the opposite. Bearish order block is a bullish candle. Bullish order block is a bearish candle. That is the opposite. Okay, so in an up to downtrend, the last up candle here, the last up candle, okay, you mark it. That's what you call a bearish order block. Okay, meaning is price is going to come down. When price comes back here, it's going to come down. So when they come to pick more sell orders, then they'll sell. Okay, that's what's going to happen here. So in an uptrend, when price is going up, we are looking for bullish order blocks, which are the last bearish candle. When price is coming down, we are looking for bearish order blocks. The bullish candle, right? So most of the time, it's my paint. Most of the time, when price is making higher highs, higher lows, like this, okay, higher highs, higher lows. Most of the time, the higher lows are going to be on order blocks, old order blocks. Order blocks. So when price comes back to the order block, we call that RTO. Okay, return to order block. Return to order block. Return to order block. So most of the higher lows are going to be on order blocks. Most of the lower highs also, the lower highs.
Should I mark whole candle?
Sorry?
Should I mark whole candle? The bearish one. Like the, yeah, the last bearish one.
So you need to mark the last order block here. Then
Okay.
so most of the lower highs will be on order blocks, most of them. But now let's go deeper into the order blocks. Okay, how do you know that a candle is now an order block? So here we are looking for, we are using this example, the bullish order block. This one, bullish order block. So this is this down to up. The last down candle here is this one. Last down candle. So that is now a bullish. But how do you know it's a bullish order block? How do you know? You want the next candle or the candle after that or the third candle to close above this candle. Okay. Once it closes above, then it becomes a bullish order block. Okay. Now it's a bullish order block. But if this candle had closed here like this is not an order block. No, it's not. If the next candle also closed here, it's not an order block. Let's say this is the line, right? This is the line here. Yeah, this is not an order block. So, but let's say now the third candle is now the one that closes above here like this. This is now a all order block. It's now valid. It's now valid order block. Okay. So even if there was something like this is the wick like this. It's not a valid or it's not the order block yet. It's not. We have to wait until the candle closes above. Okay. Then once they close above, it's order block. Then you can mark it. Then now you can mark it. So there's supposed to be a wick here. So then you mark the wick, the close, and also the 50%. The 50% of this order block, this candle.
Should I use Fibonacci for this?
Sorry?
Should I use the Fibonacci for the 50%?
Yeah, you use the Fibonacci. So then you mark it. Then now when price comes back to the order block, then we can buy. We can now put a buy. We can buy here. Because when the banks are coming back, they're also coming to pick the buy orders. So we also buy with them, right? So if the candle closes below the 50%, then the order block is no longer valid, okay? If this candle, let's say the candle did something like this, okay, this is no longer a valid order block. It's no longer valid. right? So what we want is we want the candle to close above, something like this. We want the candle to close above like this. Even if it's like this, it's valid, it's still valid, it's still okay. Because the body of the candle closed above. We don't care about the wick. The body is important. It closed above. Then this is a order block. Even if it was like this, small candle, then long wick like this, it's still valid order block. This is a valid order block because the body closed above the 50%, the 50%. Then you buy, then now price goes up. So now this down to uptrend, and we now have a new order block here. This is a new order block, a new one. So we wait for price to come back, and then we buy, then price goes up. Right. So now from the daily, weekly, monthly, all the order blocks are important. All of them, they're very important. Okay. Whenever price comes back to those order blocks, two things are going to happen. Either price will reverse or price will do a short-term reversal. Okay, small reversal, then price goes up. Whenever price comes back to those order blocks. So these are all important order blocks, all these ones. From daily, weekly, monthly, they're all important order blocks, very important. But now when we come down to the small time frames, we now have so many order blocks, so many, too many. So from the daily coming down to 1 minute, M1. Okay, this is where we put our market structure. We now use market structure. So here we want the order block before BMS, before break market structure. The order block before break market structure. So when price makes a high, low, and they break market structure here, you need to look for the last order block here. Where is the last order block? If it's here, you mark it, then price comes back, you make a higher low, then you buy. Price goes up, breaks market structure. Again, look for the new order block. Sometimes the order block is very big. Okay, you can mark it like this, it's okay. Then price comes back, make a higher low, then we buy, then price goes up. So we're looking for the order block before break market structure. Market structure is very important. All right. So for example, if we go back, we go here. So we have an example of bullish order block. So this was a lower low, lower high, BMS, lower low, bullish BMS, type 1 reversal. So now we are bullish. So when they broke this market structure, the last down candle is this one. That's the last down candle. Okay, so you mark it, you highlight it. Price goes up, makes a higher high. Then they come back here, then you buy here. This is a higher low, RTO. Okay, higher low, return to order block. This one, higher low, return to order block. Then price goes up again, they break market structure, BMS. Look for the last order block. The last one is this one. This one here. You mark it, and then price comes back again here, higher low, return to order block. Then you buy again. Then price goes up, and they break market structure here. Well, let me use the straight line. Yeah, here, when they break market structure, look for the last order block. Is this one here. Okay, we have this small one here, but if you have a bigger one on the left, you pick the bigger one. So this is a new order block before break market structure. So when price goes up and comes back, we're going to buy again here. Then price goes up. So that's how you pick what? The bullish order blocks, which are the last down candle, the last down candle. So this is the last down candle, last down candle, last down candle. Before the BMS, before all this BMS. Then for the bearish order block, same thing. This was the higher low, then this was the higher high. This is the BMS, okay? So when there was this BMS, the last up candle is this one. In premium also, we don't want the one in discount. We want the one in premium. Okay, in premium, above the 50%, then lower low, then here, lower high, RTO, return to order block. They came back to the order block here. So sometimes they can come back to the wick, or they can come back to the body, or even the 50%. We don't know what they're going to do. They can come back anywhere they want. Then they come back, price comes down, breaks market structure. Our new order block is this one here, the big one here. And then, so later, when price makes a lower low and come back here, we sell again, and price comes down. All right. So we want the order block before BMS. That's the one we want. But the only time we don't pick this order block is when we have something like this. Just give me a second here. Give me a second. All right. The only time we don't pick this order block with something like this. So this is the higher high, higher low, BMS, and then this is your order block. And then price comes back. Order block to buy. So let's say price breaks market structure here. As soon as they break market structure, you look for your order block. The order block is here. Right here. All right, and then, so now you have this low here. This is the new lower low. The new low here. Let me change the color. So this is the new low. And then let's say they make the new high here. This is the new higher high. So now if you divide this in half, you're going to see that the equilibrium is here. So this order block is now in premium, not in discount. So now we cannot use this order block. We cannot use this because it's in premium. So we want the one down here in discount. In discount. So you have to mark for the one down here. So that's the only time we don't pick the order block before BMS. And then price comes down, then price goes up. All right. So let's go back to this chart. Let's go to this chart here. All right, so we're going to look at this uptrend here. So in an uptrend, we're looking for bullish order blocks. So this higher high here, higher low, this is the break market structure. When you see the BMS, mark the order block. The order block is this one. Okay, price makes a higher high, comes back, higher low, but there was a range in discount here. There was a range on in the order block. Okay, there was a range. And then finally, then there was this long range here. Price was ranging again. So they came to the order block, went to premium, came back again, then price broke market structure here. So when they break this market structure, this is the new order block. But they did not come back. They never came back. So sometimes they won't come back to the order block. Just like I taught you in the market structure, sometimes they don't come back to the discount or premium. So then price goes up and makes a what? A higher high. Here. Then comes down, makes a higher low, then fails to make a new high, then fails to make a new low. So there was another range. Price was ranging. So in this range here, this is our big structure, our major structure, this one. And this is our minor structure here. with minor structures inside here. So if you look at this minor structure, this was a lower low. Okay, this down to uptrend, this was the last down candle, this one. So when this candle closed above, this was now an order block, a valid order block of this minor order block, this one. So again, major, major, then this is all minor. This is a minor, lower low, lower high, then this was the return to order block. They came back to the order block. This is an all minor structure, return to order block. And then price goes up. So there was a lower low here, lower high, failed to make a new low, return to order block. Then BMS here. This is the BMS. When they did the BMS, this is the new order block, this one. That's our new order block. So we mark it, and you can see that after they broke market structure, this candle came back to the order block. Then price goes up. Right here, if I can show you. Yeah, right there. So this was the order block. First return here, then BMS, then again here, return to order block here. Then price goes up, and now they break market structure. Now, this same chart here, right here, we're going to go to the weekly. We're going to go to the weekly. Okay. So this is the same chart, but now it's a weekly. So this one is the monthly time frame. This is the weekly time frame. So on the weekly, this is the higher high, and this is the higher low. Okay, and this was the small structure and the minor structure. And these are the lines of the order blocks on monthly. These are the order blocks on the monthly. All right. So let's look at this minor structure. Okay, this up, down, up. Look at it. Okay, you see higher high, higher low. Failed to make a new high. So most of the time, if you see a type 2, this failed to make a new high. Most of the time is going to happen here on the old order block here, on an order block there. This failed to make a new high, even like this. When it fails to make a new low here, it's going to do it on an order block here. This order block here. That's where it's going to fail. All right. So higher high, higher low, failed to make a high, BMS, type 2. Then when you see the BMS, mark the last order block. So here we have a downtrend. So we're looking for what? The last up candle, it was this one. So lower low, lower high, return to order block. Then price comes down, breaks market structure. Our new order block is this one. But here, like I said, lower low, they never came back. They did not come back to the order block. Sometimes they don't come back. Then we have this BMS here, and we have a new order block, this one. Then lower low, then here, lower high, return to order block. They came back to the order block. Came back to the order block. And then they broke market structure here. They made a lower low. So when you see the BMS, mark the order block. This is the order block here. Okay, then lower low. Then here there was no lower high. There was the BMS. Okay, they violated the order block. They went past the order block. And why? Because they were now changing direction. Price was now changing from the down to the uptrend. So that's why they violated the order block. So lower low, lower high, lower low, BMS. This was a type 1 reversal. Type 1 reversal. This is the BMS. So now we are bullish. We are now going up. In a bullish trend, we are looking for what? Bullish order blocks. So the last candle before this is this big one here. This big one here. Then price made the higher high, then higher low in the order block. Sorry, the higher low is, yeah. Then price breaks market structure here. Here. Where's the new order block? Is this one here, the last down candle, this one. And then on the same level as this order block is also the monthly order block. And then higher high, then higher low. Return to order block. They came back to the order block. So this is a higher low RTO. Then price goes up and breaks market structure. When they break market structure, new order block is this one. That's the new order block. So higher high, then come back, higher low, return to order block. This was a good confluence. Why? Because this weekly order block is on the same level as the monthly order block, this one. This order block, this line here, that's the monthly order. So sometimes you can have two order blocks on the same level, okay? From different time frames, they can be on the same. That's a good confluence. Then BMS, then our new order block is this one here. Then price goes up, higher high, but here they did not come back. They never came back to the order block. They never came back. So this is a higher low. Then price goes up. Okay, so this is a higher low, return to order block. Higher low, return to order block. Just a normal higher low. This is just a normal higher low. No return to order block. Another example. Sometimes you can see a situation like this. You see a situation like this. Okay, let's see. We're going to see something like this, where you have something like this and this. So if you see two candles like this, and they are the same level, you pick both of them. They are both the order block. Two candles that are equal, like this, with the wicks, they are both order blocks. So for example, here, this is why we pick these two candles here. These two candles, they are both equal. That's why it's the order block. So higher high, higher low. BMS, order block here, higher high here, return to order block. Higher low, return to order block. Then BMS, again, this is the last order block, the last down candle before the BMS. That's the order block. You mark it, then higher high, then another complex pullback, then higher low, return to order block. Then BMS with a gap, but this is the order block before the BMS. So when they come back, we buy here again. Then price goes up. All right. So the order blocks can be used once or twice, most of the time. Majority of the time, it's once or twice. Okay. You are going to have a maximum two RTO. Okay, maximum 2 RTO. But if they give you more, it means they'll be ranging or they're building up liquidity. That's what they'll be doing. Okay. So, for example, what you see here, when they came back to this order block, if they come back and pick the orders and there are no more orders here, the next time they come back, they will go past the order block. Why? Because there are no more orders. But if there are still orders, then they will come here and then they'll reverse on the order block. Like what they did here. Okay. First return, then the second return. But then this one, these are volatility indices. They're different from Forex. These ones, there's too much manipulation on these ones. But it's the same thing most of the time. So higher high, higher low, BMS, higher high, BMS. This is the order block. Lower low, here, lower high. return to this bearish order block. BMS, lower low, again, lower high, return to order block. So you can see that here, they came back to the body. Here, they came back to the wick. To the wick. All right. So for example, again here, this was the lower low, and this was the minor structure. Minor, all of this was minor structure. All of this is minor structure. And then BMS, okay, where's the last order block? This one. And then again, that's where they came back. This is the RTO, return to order block. Return to order block. Again here, higher high, higher low, BMS, higher high, higher low, return to order block. BMS, higher high, higher low, return to order block in discount. These order blocks are in discount. Okay, then BMS, then higher high. Then here, this order block did not work because now they were coming down.
Okay, that's not the why you take 3 days in the order.
Like I said, can you just write? I can't hear you when you speak. Your voice is just breaking up. Oh no, this was an H4 order block. This one. If you go to this is H1. If you go to H4, this is one candle. All of this. Okay. 1, 2, 3, 4. This is the H4 candle. This one, H4 candle. So that's why. So also, sometimes you. So how do you know that the order block is going to work? How do you know? Or sometimes price can go past the order block. So how do you know it's going to work? So here we are going to have our order block time frame. This is where you pick the order block, and then you want lower time frame. So if you mark your order block, how do you know it's going to work? You want to see a lower time frame reversal in the order block. Okay, so for example, for a monthly order block, you want to see a daily reversal, type 1 or type 2. For a weekly order block, you want to see a H4 reversal. For a daily order block, you want to see H1 reversal. For a H4 order block, you want to see M30 or M15 reversal. For H1, you want to see M15, that's the safer entry, or M5, that's the aggressive entry. For M15 order block, you want to see M1 reversal. So it means if this is the daily order block and the price is coming back, price is now coming back, you are going to go to 1 hour and look for a type 1 or type 2. So if you go to 1 hour and then you see a type 1 like this, then it means the order block on daily is working. It's working. But if there's no reversal, price is just going up like this, do not sell. Do not sell. Because they can violate the order block and continue to go high. So what you want to see here is a type 1 or type 2 reversal there. That's how you know the order block is working. Or yeah. So let's go to the charts. So for example here, like if you see the example that I used in the market structure lesson, this is the lower low, this one here. So let me just do this to make it easier. I'm gonna use blue to mark all the BMS. So this was the lower low. Also lower low, lower low. Lower high. Lower high. So anyway, if we take this lower high, I'm gonna use red here. And this lower high and this new lower low here, this one. You take your Fibonacci and you divide in half. This is your premium. That's premium. Okay, this is where you're going to expect your lower high on premium, right? So now, where is the order block in premium? Okay, we have small one here, but also on the left, we have this big one here. This big order block here, this one. That's our order block. So we're going to mark it like this. Now, if you want to mark the 50% of the order block, you need to use the body. Don't use the wicks. Okay, use the body. So the 50% is here. Right here. Okay, so this is the order block. So this is the way you're going to expect your lower high. Okay, and you can see that this was the lower high was right there on the 50%. They never closed above. It's just the wicks. The body is not above, so it's a valid order block. Still valid. Right? So if you pick your order block from daily, it means the order block has to be violated in daily. Okay, if we go to lower time frame here, the bodies of the candle are above, but doesn't matter. Why? Because the order block is from daily. So only daily time frame can violate the order block. So now let's see what happened. So when price came back to the order block again, so like I said, this is the what? This is the daily order. So daily order block, you want H1. So now, sometimes what you can do is inside this order block, you want to look for other fresh order blocks. So before price came back here, this was a fresh order block. Okay, what do I mean by fresh? It means the price never came back. Price never came back to the order block. So it was still fresh. It was still fresh. Okay. So you always want your order block to be fresh. There should be no return. So the first time return is the most important. First time return. Right. So when they came back here, so what I can do is sometimes I go to 4 hour and I look for other fresh order blocks. Do I have any other fresh order blocks here? I have this one. This is a fresh order block. There is no return here. Price never came back. You can see that when they broke market structure here, they never came back. They never came back to the order block. Never came back. So it's a fresh order block. I have another one here. Again, these are all order blocks before BMS. High, low, failed to make a high, BMS. No return to order block. Again, BMS, no return to order block. So these are all fresh order. So this is what you can do. You do what you call confluence. You are taking order blocks from different time frames together that are fresh. So now let's go to 1 hour. 1 hour. One hour is the same order block here, same order block. So this is where I'm going to look for my setup for my 1 hour reversal, either here or here, here or here. So now when price came back, let's see what happened. Higher high, higher low, higher high, higher low, higher high, higher low, break market structure. Then they went past the first order block. So this one did not work. So I'm left with one more order block. So this area here. So then higher high, higher low, BMS, then higher high, return to order block. This was the return to order block. Then higher low, they never, this was the old higher low. They never broke market structure here. And then failed to make a new high. They failed to go higher. And then they broke market structure here. This is a type 2 reversal, type 2. So this is now the reversal that I want. So now we have a type 2 reversal on 1 hour inside the daily order block. So this makes the order block valid. The order block is valid. Why? Because we have a lower time frame reversal. We have a 1 hour reversal inside the order block. So now when they break market structure here, again, just like I said, from daily to 1 minute, it's the same thing. You need to mark the order block on 1 hour. Before this BMS, where's the order block? Is this one here. That's the order block before BMS. This one. Before this 1 hour BMS, 1 hour BMS. So then 1 hour, we have a lower low here. 1 hour lower low. So our range on 1 hour is this. So this is a lower low, then range in discount, then there, lower high. Return to, so you can sell here. Sell on this order block. Put your stop loss above the order block. Sell here, stop loss above the order block. All right. So, and also on the daily, this was the 1, 2, 3 candle pattern, 3 candle swing high, the lower high on the daily, 1, 2, 3. This one here, 1, 2, 3. 1, 2, 3 here, 1, 2, 3. Okay. So this 3 candle pattern on 1 hour is what? It's a type 2, the type 2 reversal. So like I said, now, if you know that daily is bearish here, it's coming down, you are going to use the 1 hour or 4 hour to sell on the lower highs, to sell on the 1 hour lower highs, okay? So here, all of this, daily is bearish here, daily is coming down. So you're going to be looking to sell on the 1 hour or 4 hour lower highs. And those lower highs are going to be, most of the time, order blocks. So let's look. Let's see now. So we have this internal one, this internal structure here, inside this low and this high. But you can see that there was a BMS, and this is the last order block. And this is the lower low, lower high. There, return to order block. Then the broke market structure here, last order block is this one. Lower low, there was no return to order block here. Like I said, sometimes there's no return to order block. Then BMS here, where's the last order block? This one. Lower low, lower high, return to order block. You sell here. BMS, where's the last order block? This one here. And then lower low, lower high, return to order block. Then BMS here, but here price was not clear. There was no clear structure here. There was no clear structure up until, I think, this level here, until this lower low. Then lower low, then range, then break market structure here. When they broke market structure here, this is the order block. And you can see lower low, lower high, return to order block. Then break market structure here. Where's the last order block? It's this one. And then lower low. This was just a normal lower high. There was no return to order block here. There was no return. So like I said, yeah. So if you know that the daily is bearish coming down, you're going to be selling on the lower highs, on the order blocks. If daily is bullish here, you're going to be buying on the higher lows here. Daily is bullish here, or even here. You're going to go to the 1 hour and buy on the higher lows, return to order blocks. That's what you're going to be buying. So now daily BMS, the broke market structure here. So the daily BMS. Right here. So now we have a new lower high, which is this one. That's the new lower high. The old one, we are done with it. We are done with this. So we have this new lower high. This one. That's the new lower high. And the new lower low here, this one. So again, Fibonacci from the high to the low. Premium. Premium is this one. This is our premium. Above the 50%. That's where you expect your lower high. And that's where you also want your order block to be. Then where is your order block? We have this big one again here, this big one. So now I can just do this. I can just move it here. Now, this big order block here. So that's where I'm going to, that's where I expect my lower high. So even before price came back here, when price was still here, I'm expecting price to come back here to this order block in the future. So now when they came back again, let's go and see to 1 hour. Was there a reversal in the order block? This was the higher high. And then this was the higher low. And then this is the BMS, and this is the higher high in the order block. So now we want to see, are we going to get a 1 hour reversal or not? That's what's going to tell us that the order block is going to work. We want to see a 1 hour reversal. And then higher high, then price came down and they broke market structure. So the order block was valid. There was a 1 hour reversal here. This one. So this was the type 1. High, low, high, BMS. BMS here, BMS here. Type 1 reversal. Type 1 reversal. So the order block worked. The order block worked. Right. What's going on with my stuff now? Just give me a second here. So when they broke this market structure, this is our new lower low right here. So lower high, lower low. If you take the Fibonacci, this is the order block in premium, this one. This one. And you can see price made a lower low, lower high, return to order block. Return to order block. That's what happened there. And then, so that's how you do it in the downtrend. Okay, that's how you do it. And then in an uptrend, let's look for the uptrend. Let's look at this one. Daily order block. And also this one. So higher high, higher low, higher high, higher low, higher high. So here, when they came to make a higher low, let's go to 1 hour. Was there a reversal? Right. So here, the first time they came back here. So there was a lower low. So there was a lower low, there was a lower high, there was a fail to make a low, then BMS, type 2 reversal. Then higher high, higher low. So here, price they went past the order block though. They went past, but still there was a reversal. So this is also common but we'll talk about this when we talk about lesson 5. Yeah, we'll talk about this in lesson 5. Then they broke market structure here. When they came back to this order block here, again, was there type 1 or type 2 reversal? There was a lower low, lower high, lower low, lower high, lower low, then bullish BMS. This was the bullish BMS. Yeah, this was the validation of the order block. So it means this order block worked. Why? Because there was a 1 hour reversal here. 1 hour reversal. Well, let me choose let me choose this one here, this uptrend here, this one. So again, if you know that daily is bullish, it's going up, like what's happening here, you're going to go to the 1 hour. July. Yep. Is it here? Okay, let's see it. So we'll start with this. So now we know that the daily is bullish, right? We know that daily is bullish. So we're going to be using the 1 hour to make the 1 hour higher lows or the 4 hour higher lows. Okay, so let's go back to our order block. Okay, so if we have a 1 hour order block, so if we have a 1 hour order block, it means we're going to look for what? M15 reversal or M5. M15 is more safer, M5 is more aggressive. Okay. So here, this was the BMS, the 1 hour BMS. And the order block was what? So here you can see that here, the last down to uptrend, the last order block was this one. Okay, this down to up. Now let's go to 1 hour. 1 hour, there was actually what? A type 1 reversal. Lower low, lower high, lower low, BMS. Okay, and these three candles, these are the order blocks. So this is the day 4 hour order block. And this is also the what? The 1 hour order blocks. So now if price comes back, you're going to go to M15 or M5 to look for a reversal. Oh, I never went back. Oh, yes, right here. Also, it's 8 July. September. August, almost there. July. Right here. So when price came back here, there was no entry here. There was no entry. Sometimes there's no entry. There is no entry sometimes. Let's go back. Right. So then this is the higher high. Then this is the higher low. This is the BMS here. BMS. Where's the last order block? This one here. This one. So this is the higher high. So when price comes back here, you go to 15-minute or 5-minute to look for a reversal. Here. So you're going to look for a type 1 or type 2. When price came back here, this was the lower low. And this was the lower high. And there was a range. You can see the price was ranging here, ranging. Then they broke market structure. This is the reversal that we wanted to see. Okay, they broke market structure And this is the order block before BMS. So your buy was here. You buy here. You buy here. Stop loss about 10 pips down here. That's where you buy and sell. And then you go back again. So higher high, higher low. And then we broke market structure here. So when we broke market structure, where's the last order block? We have this one here. Okay, but we also have another one down here. But the only reason I'm marking it because this one failed. So let's see when price came back. What happened when price came back? When price came back here. So we want to say type 1, type 2. Lower low, lower high, BMS, lower low, lower high, BMS. There was no reversal here. So this one failed. So we still have another one here. This one, we have 2. So when this one failed, then they went to this one. Then this one, lower low, lower high, failed to make a low, BMS. So this was a type 2. This one worked. This is the order block that you wanted. So it worked. So you would have bought here. But I'll talk about this in the next lesson. This is like an advanced order block setup. So you would have bought here. Then let's go back to 1 hour. So again, 1 hour, higher high, higher low. Then higher high here. Higher high. This was the high. This is the order block that failed. This one. This is one that worked. So then BMS, where's the last order block? This one. So this low and this high. If you can check, these are all in discount. Below 50%. So when price came back here, again, let's go to 15 minutes or 5 minutes to look for a reversal. Right here. So here, when they came back, there was a lower low, there was a lower high, there was a fail to make a low, BMS. Higher high, higher low, return to this order block here. So you would have bought here. You would have bought here. Stop loss below. So this setup was different. It was a bit different because the lower low, the lower high, and the fail to make a low, they were all made by the same candles. It's one of those rare occasions. And then this is the BMS. And this is the order block before BMS. And this is the return. So you would have bought here. When price came back here, you buy. And when you see this reversal, it means the order block is valid on 1 hour. Then price goes up, breaks market structure. And then where's the last order block? This one here. But they never came back. As you can see, they never came back. They did not come back. Just give me a second. All right. So like I said here, they never came back. There was no return to order block here. Okay. So they made a higher high, higher low here. Then they actually had the BMS. So with the new order block, this one, the last down candle before the BMS. When they came back the next day, you come back, you go to lower time frame. You want to see what a reversal. Did we have one? Lower low, lower high, lower low, BMS. There's your reversal. This is the order block before the BMS. Higher high, there, higher low, return to order. You buy here. Stop loss down here. So as long as you know that daily is bullish, you're going to be buying on the what? On the H4, H1, higher low. On the higher lows. That's where you're going to you'll be buying. And then here there was a range. Price was ranging here, ranging again, then higher high here, then higher low, and then when they broke market structure, this is your order block. So when they come back the next day, here you want to see what the type 1 or type 2. Let's see, did we have one? Small lower low, small lower high, lower low, lower high. Failed to make a low, BMS. Type 2 reversal, but there was no return. There was no return on this day. But there was another setup though. Higher high, higher low, BMS or the block, higher high, you would have bought here. This was another entry. Since there was no setup here, you would have bought here. Right. Then higher low, higher high, and then this one, I think that they never came back. Yeah. Higher high, higher low, BMS, higher high, they never came back here. Yeah, they never came back to this one. They never came back. So sometimes they don't come back, like I said. All right. Is there any other example that I can use here? Any other example? Let me see if I can see other examples. Last example, lower low, lower high. When they break market structure here, this is the order block. Lower low, when they come back again, you go to 15 minutes or 5 minutes. Look for a type 1 or type 2 reversal. So what did we have here? There was a higher high, low, failed to make a high, BMS. Lower, low, and this is the return to order block. You would have sold here. Stop loss somewhere here. Then you sell. Right, so that's what you do. That's how you trade the order blocks. That's how we trade with the order blocks. So it's market structure and the order blocks together. You mix them together. What is that USD? Wow. You see this one here. Let me see something here. So you see that lower low, lower high, lower low. This is the order block. Right. Let me do this so I can show you. This is the BMS. This is the BMS. This is the BMS. This is the, okay, there was no BMS here. But you see that when they broke market structure, this is the last order block. They came back. When they broke market structure here, this is the last order block. They came back. When they broke structure here, where's the last order block? This one. They came back again. What about this one? This one was on 1 hour. I think this was on 1 hour. This one. And let's see. Did they come back to this one? Yeah, they did come back right there. Right there, they came back. When they broke this low, here, they came back again. I'll put it at the 50%. They came back. When they broke market structure here, with the last order block, this one, again, they came back. So you can see that all these were all lower highs, return to order blocks. Lower low, lower high, return to order block. 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 BMS, lower low, lower high, return to order block. Lower low, lower highs, return to order block. Lower low, complex pullback, lower highs, return to order block. Do you see that? So let's go to 15 minutes. Where would we have sold? So let's see now what happened when the price came back. So you see, when price came back, higher high, higher low, higher high, higher low, failed to make a high, BMS. Then price came back the next day. Let's see, yeah. So there was no clear entry here. Let's look for the other one. Higher high. Okay, let me 5 minutes. 12th April. I never went back. April, May. Okay, let me see. April, yeah, right here. Right, higher high, higher low, higher high, BMS, lower low. Okay, this is for next lesson. Here, when they came back, higher high, higher low, high, low, failed to make a high, BMS. This is the setup here. You'd have sold here. This is a type 2 reversal inside this order block. Then the BMS, then this is the new order block. Let's see what happened when they came back here. Okay, higher high, higher low, failed to make a high, higher high, higher low, failed to make BMS. And then this day was a bit choppy though. It was a bit choppy here. And then let's look for this one here. When they came back here, yeah, there was a small higher high, higher low, higher high, BMS, return to order block here. So the entry would have been here. You would have sold here. Let's look for another one, the last one here. When they came back, higher high, higher low, higher high, BMS, lower low, return to order block. Let's see, did they come back? Yeah, they came back here. So you'd have sold here. Sell here, stop loss, 8 pips. That's what you've done there. Yeah. So this is how we use order blocks. Any questions? Any questions? All right. So I'll send you the video when it's done processing. Then you can watch it, and then you can do the homework, right? So I'm gonna send you some charts from other students how they mark the order blocks, and then you're going to. So for every lesson, you need to do 50 charts. Okay, 15, 15, 15, then 5. You send them like this. Okay, 15, then another 15, then so you send 15. Then I have to mark them first. Then you send the other one. Then I'll mark them and send them back to you. Then another one. And then you're going to be marking market structure and order blocks. Market structure and order blocks. That's what you're going to be marking. All right. So I think that's all for today. If you enjoy the rest of it, if you have any questions, just send them to my Telegram. All right. Enjoy the rest of your week. All right. Goodbye.